ASML is a company that has a lot of people talking about it, and it's really not that surprising why. It's a company that's performed pretty well over the last 5 years, up 156%, but it's also a company that's gone through quite a few things. The 52-week high, 1,110. We are, believe it or not, substantially below that at 757. But this is still a company that's performed pretty well, and even better once you zoom out and you see the 10-year performance. All right, we're up, early 2015, we're up from 110. That's pretty good. That's still a very good performance over the last 10 years. It's also a really, really important company providing a key machine in the supply chain that NVIDIA uses to make their AI GPUs. Now, I'm not saying they use it specifically, but they are used to make the stuff that NVIDIA uses to make their AI GPUs. So that's very, very important. No one really knows where ASML stands, and we're going to dive into a lot of the stuff surrounding the company, balance sheet, earnings, last couple quarters, things like that, risks involving the company. We're going to dive into all that in this video. So hopefully you can get a pretty clear understanding of where ASML is after watching this video. When investing in a company, it's really important to understand what the company does. With ASML, it's both simple and kind of complicated. It's simple because they only really do advanced semiconductor equipment, so lithography machines specifically, just the crazy advanced stuff. You can look it up. Look up ASML machine and just go to Google. I'm not going to show you just because of potentially copyrighted images. However, they're insanely complicated. So understanding exactly what they do is nearly impossible. I don't know if there's a person on the planet that knows exactly how every bell and whistle works. However, ASML is a really, really important company for the entire world because they provide these advanced semiconductor machines that TSM and maybe Samsung use to provide the high-end stuff, that basically a blueprint that NVIDIA, Apple, those types of companies use to make their computer chips. So companies like NVIDIA, the high-end AI GPUs, could not be made without ASML because of TSM. So they're a little bit further down the supply chain, but they're just as important. And like I said, I'm not here to convince you that ASML is the best company in the world. I'm not even claiming that. However, ASML is important. And if you believe that NVIDIA is important, then believe me when I say ASML is important. I think most of people watching this video probably agree ASML is important. And their revenue and profit certainly backs that up. So ASML is a very, very important company as well. And like I said, we talk about economic moat. Economic moat is just the competitive advantage you have over other companies. They have an extreme competitive advantage. They basically have a monopoly. They don't use monopolistic practices, but they don't really need to because no one can make what they do. No one can make it. No one can replicate it. They have some patents and stuff, but outside of that, even just reverse engineering the machines is nearly impossible. So it's a huge, huge economic moat that they have, and that's one of the main reasons that it's going to have a higher PE ratio, and we will dive into that in the future. And higher PE ratio is a risk, but once you have A, the growth they have, but also B, the competitive advantage in being in such an important industry, that is going to make up a lot of your high premium on the stock specifically. However, it's just simple to understand that ASML is a very important company, and they've also been very successful. Taking a look at ASML's PE and forward PE, we can see here the PE is 39.5, forward PE is about 34.5. This is above the S&P 500, which has PE about 30 and forward PE about 23, but you would expect a company like ASML, which has a crazy high moat, is in one of the key industries in the world, and has grown and performed so well over the last decade plus, you would expect that company to have some premium attached to it. And actually, we're going to look at the PE, historical PE of this company in the future, and generally, this company trades around these levels. So it really shouldn't be that too surprising when you see that. And we can see for 2025, it is expected to be better. The revenue is not quite as extreme as people wanted it to be, which is why the share price has gone down recently. Also, it was relatively high when it was back over 1,100-ish. That was still pretty high. But even if we just rebound to that year, there's still a lot of growth in the share price to be had. But looking specifically at earnings per share, there's no real difference in GAAP and non-GAAP. Sometimes you have to be careful with PE. There's one-time expenses or bonuses that can be factored into a company that can really distort PE. We see not much discrepancy here, so we can know that, okay, PE levels are probably pretty accurate. Then we can see here, there was a little bit of a down. You're a little bit down in 2022. Up in 2023, and then you're basically down a little bit again this year. Now, this looks not particularly great. However, we're going to look at the income or the balance sheet, income sheet a little bit in the future, and we can see that in 2019 and 2020 were particularly good years. There was a lot of growth between 2019 and 2020, so this doesn't look super impressive. It really doesn't. However, they have done well over the last 5-10 years plus years. They really have. Certainly since 2019, they've basically tripled revenue. It really doesn't look like that here, but they have. So 1.3% increase in revenue, 33% increase, and then you're down 2.9%. And then next year, from what I understand, the company's guiding somewhere between 7 to 15% growth next year. So if you hit on the higher end, you're probably pretty happy. Lower end, you're probably slightly disappointed. However, that's really not too crazy. And this isn't a good year for semiconductors in general outside of AI GPU. This is what the company said. Outside of AI GPUs and NVIDIA and maybe a bit of AMD, generally the semiconductor industry is in a bit of a lull. They're kind of in a downturn. You can see that in Micron. You can see that in AMAT. You can see that in AMD outside of the data center stuff. So it's really not surprising that they aren't expecting a phenomenal year. But even 7 to 15% growth is pretty impressive. And I'm really not too worried about anything here. It's not crazy impressive. You would want it to be a little bit better for a company in PE levels around here. However, like I said, once you factor in 2019 and 2020, it looks a lot better. This is a good visualization of ASML's last quarter. So we can see this is the revenue coming in. Vast majority of it came just from actually selling the new machines, 5.93 billion, and then you got a total of 7.47 billion in revenue. And you do have quite a lot of cost, at least cost of sales, 3.67 billion coming out from that. There is never going to be an insane profit margin that you can get from this. Something like an NVIDIA where they had 80%. There's just too much cost associated with it unless they were being really, really weird short term and just jacking up prices insanely high, which would not be good long term. So that is a negative. You're never going to have the crazy, crazy high margin, but most companies don't, and that's really just not what ASML is able to do. But you can still see, after everything's said and done, net income about 2 billion. So off about 7.47 billion in revenue, you're taking about 2 billion home in profit when everything's said and done. That is pretty good. It's not insanely good, but it's pretty good. You can see there's not crazy amount of R&D or anything like that either that's needed. I mean, a good amount, but it's not insane. So this is also a pretty simple business to understand. For a lot of companies, there's like a Microsoft or Amazon, there's a bunch of different revenue streams, and okay, maybe you like this part, maybe you like that part. Even with TSM, what is being used for what they're making. There's a lot of different categories going into it. With ASML, they're pretty simple. They make the machines, they fix the machines, they sell the machines. That is it. They sell it, they take a profit, they make some new, better ones. It's really pretty simple business model, and it's really not that hard to understand. So the hardest thing is actually just saying lithography machines. But anyways, that's all I really want to cover with this. Taking a look at the balance sheet, there's a couple of things I want to discuss. So in 2019, you only had 3.4 billion in debt. Now you only have 5.1, which is a little bit of an increase, but compared to what income you're bringing in, so after-tax income, 2.8 billion in 2019. Now you're 8.4. So one, that's a dramatic increase, and that's good. But also, this is a company that really doesn't have much debt. Now, I'm assuming they probably opted to borrow less than they normally would have because of rates being so high. But that shows you this is a business that can afford to do that, and that's actually fairly impressive. But also, just how safe they are in terms of debt. Now, of course, if there's a recession, this company's higher PE, it's going to get hit harder. And also, I don't know how much demand their equipment will be. There'll probably be lots of companies opting to purchase less. However, this is a company that's not really in any risk whatsoever of going under, like at all, in terms of debt at least. Now, if we look at total current assets, things like that, nice increase there. You, of course, have an increase in liabilities as well, but it's really not something you should be too shocked in. Equities maybe a little bit flat, but it's really, you're not really concerned about anything here specifically. And then when we look a little bit further back at revenue increases and things like that, you're doing 13.2 billion in revenue in 2019, 2023, which is last year, but you'll probably do roughly the same this year. 2023, you have 30.5 billion. That is a very big increase, clearly. You're almost 3xing. You're a little bit off of 3xing over the last 5 years. Very, very good performance. Not quite as much. And actually, it's probably about the same when it comes to income, but we've had some wonky. We had a crazy year in 2021 and things like that. Profit margin, let's just say 3x. You 3x'd a little under 3x revenue. Let's exactly 3x profit margin if we're being a little bit conservative, right? This is a company that's grown very, very, very fast, very, very, very well, and they're in a very good, they're just a really safe company. They really are. When you look at it for a growth, now where the not safe comes from, we talked about before, PE obviously is a little bit expensive, but you would expect a company that has 3x profit, almost 3x revenue over the last 5 years to be valued very high. Probably you would expect it to be a little bit higher, especially when you consider how important they are and the high moat that they have. So yeah, looking at the balance sheet and income, it doesn't do anything for me other than reinforce that, hey, this is a pretty stable company. Let's take a look at the historical PE for ASML just to kind of get an understanding of where this stock historically is trades, what PE level it's at. But first, before we even do that, let's take a little look at where the earnings was. So a decade ago, late 2014, you're at 3.41 earnings per share. Today you're at 19.13. So if you do that math there, right, just quickly, 5.5x. You've 5.5x earnings over the last decade. That is a phenomenal performance, clearly. So outside of PE, this is a stock that is growing, and it's growing very fast. But now if we look at the historical PE ratio, basically since 2013, this stock has traded somewhere in the realm of 21 and high 40s. We can see the stretch of 2019, the stock was basically 39 PE and higher. It dipped a little bit in 2022, not that surprising. We were even higher. We hit those highs, earlier this year where it was 54, which was a bit extreme. But now we're kind of at levels where historically we've been here. It's a little bit high. It's a little bit on the high end, but also you've had more time to reinforce, hey, this is a company that's growing fast. So if we're looking over the last 5 years, this is actually fairly on the cheap side outside of 2022, but everything was grim in 2021, 2022. So this really, I'm not concerned by these PE ratios. As a long-term hold, I'm not. Am I saying, oh, this is crazy buy, you have to buy it now? No, because it historically may trade during these levels and it may trade for a while. But assuming this company grows at the rate they have been, or even if this is a company growing half the rate it has been, it's still growing more than the average company. S&P 500 is only up about 200% over the last 10 years, and that's a pretty good performance for it. So even if you have the 5.5 they've done, right, 5.5x they've done, you're still about 2.5x and you're doing better. So, and you would probably expect them to do better than that. At least I do. So this is a company that is kind of right in the level of where it trades historically, certainly over the last 5 years, maybe a little bit expensive over the last decade. But like I said, this is a company that's been performing well, very, very well. So it's not surprising that PE levels are here. And this is probably within its normal range. It's important to look at the risks and advantages that any company you're investing in has. So I'm going to cover some of the top ones for ASML. Of course, I cannot cover every single risk. So if you have any, ask them down in the comment section. I would love to address them, but I'm going to cover some of the top ones. First one being China. They're not really allowed to sell to China because people don't really want China to have the most cutting edge advanced semiconductors available because that's risky. It's a geopolitical risk that the entire world identifies. So ASML is basically barred from selling a lot of their stuff to China, which is bad in the sense that revenue stream is gone. But in my opinion, I think that's a bit overblown. They're doing well with most of that revenue stream gone already. This is a company that's growing next year. And yeah, you would like to have it if you're just solely an investor in ASML. However, with it not being there, I don't think it's something crazy or terrible that's happening. My personal opinion. Another one, it is a foreign company. At least if you're in the United States, most of my viewers are. So if you're not EU, that is a disadvantage. Also, generally, just historically speaking and recently speaking, United States companies out-compete their counterparts. Just generally, you can see where market caps centralize. It's not really much of a debate. But I think ASML is an outlier. I think there are outliers. I think TSM is an outlier. I think they have such a strong competitive advantage that I'm not too worried about it. The semiconductor is a cyclical business. This is true. However, even with a lot of the semiconductors being down, ASML specifically has said, hey, this would be a terrible year, but because of AI GPUs and things like that, NVIDIA, we are actually doing still well. So the fact that the top end semiconductor stocks, whether it be NVIDIA specifically or the TSMs and the AMDs of the world, it seems like we may not be with what Micron did, or what Micron has alluded to, it might not be as poor, might not be as much of a down cycle, a cyclical down cycle as we think we're heading into. So that trend could be bucked, but generally semiconductors are cyclical. That is a risk. The top end, those on the top end, like I said, the NVIDIAs, maybe AMDs of the world, have seemed to buck that. So with ASML specifically, you might actually say that it's might be gone or at least mitigated to some degree. I'm kind of there. I think they're going to do fine generally long term. I don't think they're going to be hit as hard as many of some other semiconductor stocks might. So those are some of the key disadvantages or risks. Some of the key advantages, I've already covered them in this video, but insane competitive advantage. There's a mountain of a barrier to entry into what they do. Basically, no one can do it. You would have to hire some of the top people, basically, but I'm not even sure you're allowed to do that because the patents, and it's just crazy high competitive advantage. It's such an important industry. You can't have all the top end semiconductors without them, top end computers without them. It's just not possible. So those are two incredibly large advantages, and so much so that I'm not really going to dive into any other. It would be really simple if a company's performance and the stock price perfectly mimicked each other. That's not always how things work. Sometimes the market thinks better or worse than the company's actually doing. So it's important to look at a stock price to actually see how it's performing over the long term in a vacuum. I think so, at least over the last 5 years. ASML is up 156% in a vacuum. That is a very good performance. Maybe not like top end, but it's a good performance. And if you're outperforming the market, outperforming the S&P 500, which over the last 5 years is only up 90%, that's very good. Now, if we zoom out, it looks even better. Since early 2015, which is a decade ago, it was up from about 110 to where it is now 757. And like I said, this is quote unquote lows. It was over 1,100 at points earlier in 2024. I was going to say this year, that's not true anymore. So ASML is a company that's performed well. And now a lot of that growth has come from a PE ratio that has increased from about 20 to 40. So you had, 100% growth from that specifically. Even if we said, if we just said, ASML isn't going to grow quite as fast, and their PE ratio is going to sit near 30 over a long term. If a decade from now they grew, because they were growing crazy fast. This is a company that has grown very, very well. I mean, we can look at it. We already looked at it earlier. Let's look at it again, just so we're clear. From 2019, right? You're doubling. So you double every 5 years. You would double your 4xing. Let's just say 4xing is what they did. I think they did a bit better than that. They 4x'd, right? 30% off of that, okay? And then, your PE ratio goes down to 30. You're still growing more than the market over a 10-year period. So in that sense, this is a company that is pretty decently valued, and I expect it to grow probably about that rate if we're being fairly conservative. This is a company that has crazy economic moat, crazy competitive advantage in an important industry that has grown well historically. You're going to expect PE ratios to be this high. And in my opinion, I expect this company to continue to grow, outperform the market over a long period of time as a company. Whether the stock price will reflect that, we don't know. But as long as the earnings per share grows faster than the market, you would expect it to be valued over the market over the long term. And honestly, I'm not surprised when it was valued in the 50s for PE because of the growth rate and the insane competitive advantage. I want companies that have a proven track record of growing and a proven track record of having a large competitive advantage and a proven track record of being important industries. This company has all three. Now, yes, is the PE ratio of 41 super attractive right now? No, it's not. However, I personally am a long-term investor, and I have no qualms with investing in this company around this price for the long term. I cannot tell you guys what to do. You guys follow your heart, whatever. If you made it this far in this video, you're probably interested one way or another, or you really like my content, and I'm thankful for that. But anyways, ASML, I think, will, over the long term, outperform the market. I personally have investments right around this price point here as a long-term hold. I wouldn't be surprised certainly if there's a market downturn, this company is probably going to fall quite a bit just because of the PE levels. And like I said, 41, it may even fall to 30 sometime relatively soon. It wouldn't be that surprising. But over the long term, I love holding this company. I want to hold this company. I want a large percentage of my wealth, not like a large percentage, but I want a good amount of money invested. When people think vastly different when I think of that. Obviously, diversification, I've preached this on this channel forever, but ASML is a great company. They really are. I have no issues investing in them. I think they'll outperform the market. It's not telling you to do anything with your money specifically, but that's what I think. So I think I'm going to wrap this video here. If you guys enjoyed, I appreciate if you like or subscribe. Appreciate all of you who made it this far. It's a long video, and it helps me out anyways, just in terms of watch time. But if you did enjoy it, I appreciate if you liked or subscribe if you are new and want to see similar content. I do all sorts of videos on this channel. I appreciate all of you for watching.